Good morning, everyone, and welcome to the Trade Talk podcast. Today, if we go through with global markets, then in that Asian markets as well as US markets did extremely well. Asian markets, especially following to the substantial rally in the US markets, which was on the back of PPI numbers, and PPI numbers were below expectations. So that has actually helped equities to do well, because now the cutting interest rate in the month of September would be the chances of cutting interest rates in the coming meeting would be very higher. Today's inflation number in the US will also support to the data, and if inflation numbers are also as per expectations or little bit below the expectations, then the chances of cutting interest rates would turn very high, and that will actually decide the next trend for the market. Gift Nifty is also trading nearly 75 points higher, and that will help the market to open somewhere close to 24,200 levels. But on Tuesday, the market has broken and closed below the levels of 24,200. So we need at least consistent activity above the levels of 24,200 for reaching 24,370 levels, where the market is having next leg of resistance. Bullish reversal will come only if it manages to surpass the level of 24,500, which looks unlikely while looking at the entire setup of the market. But in case if it manages to cross 24,500, then the chances of hitting 25,000 would turn high. On the other side, if we see the market is sustaining below the levels of 24,200, then it's not positive. Below 24,100, we could see furthermore weakness, and in that case, the chances of hitting 23,800 would be very high. The market can take some pause around 24,000 based on its overall option statistics, but overall formation is suggesting us that the markets are heading towards the levels of 23,800. A close below 23,800 will be negative for the market. For the Bank Nifty, there also we saw weakness, and in fact, Bank Nifty closed below the levels of 50,000, which is negative. Next leg of support is at 49,600, 700. Below 49,600, it will break important support zone of 100-day simple moving average as well as 50% retracement area of the previous rally. So below that, the chances of hitting 49,000 or 48,800 would be very, very high. On the higher side, as I mentioned, 50,000 is going to act as resistance. Above that, the chances of hitting 50,500 would be high, but current setup is suggesting us that 50,500 will be the biggest hurdle for the Bank Nifty, and the strategy should be to look for reducing long positions till the markets are trading below the levels of 24,500 and 50,500 on the Bank Nifty. Other indices are also showing weaknesses, so we need to be more and more stock specific in this market. Global macros turned positive for emerging markets, especially bond yield is at 3.85. 2-year bond yield is also correcting. That means we are going to see some recessionary sort of activity in the US markets, as well as if we go through with crude prices, then there also we saw some cool off from the highs of 82 to now $80 per barrel. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening to me, and have a great day to all of you.